Welcome back, Alpha Hunters. Hope everybody is doing. What is today? Tubular Tuesday. All right. Hopefully, you're being your best California with tubular. Well, we you know what? We're not seeing the best of things in the market. A little bit down today. What was really interesting, it was yesterday. The last 10 minutes. I mean, you just got like a really quick spike there. But I mean, it looks relatively strong. But yesterday was just such a quiet day that looks pretty strong, but it's really kind of not. Especially even compared to today, like we're just not seeing a lot of activity go on in the market. So I don't know what's really going to get it going here. We did see a little bit of a dip this morning when we got jolts and what was it? ISM manufacturing. So we got ISM manufacturing this morning and the jolts job openings this morning, 30 minutes after the bell. So we saw an initial pop and then we dropped there for the next 15 minutes. Meh, all right. We didn't really do much after that though. Kind of just went sideways for a couple hours, broke down the low a little bit, and then we started pushing higher after that. So yeah, not a whole lot kind of going on today. There was still some earnings that came out this morning. Cat, by the way, I saw Cat's up a lot. I didn't look at their earnings, but they were up a lot. So we'll go take a look at some of these. What else we got? Rambus, Rig. Really, Cat's about the only one I really care to look at. Merck is there. You can check out Merck. Altria. All right. So Altria, how are they doing? They gapped up but sold off. All right. Gapped up but sold off. Been pretty much flat there on Altria for the past couple of months. Past couple of weeks. All right. Let's just get back to the normal deal here. We'll look at earnings. Some earnings numbers, but nice little gap down on the market today. How much was this? I'm going to show you what was the issue with the market really this morning on the gap down. We gapped down a little bit over 0.25%, 0.33%. So yeah, nice little gap down. Qs, everything gapped down. Qs gapped down, but Qs are actually strong. You can see like the bounce back that they had after the economic data that we got. They rolled over as well, but they bounced back really strong. So the Qs, big tech looking pretty good. People probably buying the dip. IWM kind of lagging behind today. Nice little gap down. The IWM has been down more than 1% today. It's down currently around 0.75%. DIA, Dow Jones Industrial Average, looking pretty good. A little bit of a gap down there, not too big of a one. And then we went higher. It did get back to negative in the middle part of the day, but you can see it's been climbing here over the past couple of hours. Okay. Equal weight SP 500. Nice little gap down. Traded down. Yeah. This is where you were seeing a lot of, if the Qs were doing good, we're probably seeing, all the other stocks, which means the equal weight SP 500 would be lagging behind pretty good. And yeah, you can see it. It's down roughly 0.5%. Okay. All right. Let's take a look here. The VIX. Nice little gap up today, a little bit of a higher push for the weekly. All right, the dollar. All right, so this is where we're going to get into. The market is having some issues. Dollar is strong. This does not look good. We could sideways consolidated yesterday, and we pushed higher today. The other really major issue here now with the dollar, we got ISM Services PMI coming up Thursday. And then we got a bunch of stuff coming Friday morning. So, non-farm payrolls and unemployment rate. Obviously, the unemployment rate is going to be a big deal. But if it really what I'm trying to say is it doesn't look good now for the dollar to be breaking down. It now looks like this is just going to be a false breakdown that we had in the middle of July. And And I was really kind of wondering if that was the case, but I was kind of surprised we broke down because really a lot over the past couple of months before we had the breakdown in July on the dollar, there was a lot of reports that a lot of people were bearish, extremely bearish on the dollar, and yeah, it just it gets one of those things when too many people are in one direction. It's kind of like the stock market late last year. Too many people were bearish. Nobody can push the market down because everybody was bearish. There were so many people bearish. So it's kind of the same thing you're kind of getting here with the dollar. But it got the breakdown, and then people decided like, okay, finally it broke down. I'm gonna close out the longs or whatever. The problem here for the dollar here recent near term here is the next couple days. There's nothing really that's going to stop it and make it go in the other direction until we get to maybe Friday with the GDP. Maybe on Friday. I'm sorry, not the GDP. Sorry, unemployment rate. Unemployment rate. And both of those are kind of big time, but the unemployment rate is probably the only thing that's probably going to really impact the dollar all that much, in my opinion, for the rest of the week. Yeah, dollar's probably going to continue to push higher. I don't think it'll push higher as high and as aggressive as it is today. Like today's a pretty strong push, so I don't expect that. But gold, yep, since the dollar's strong, you see gold getting crushed today. Getting crushed. And this is what I've been talking about for a lot over the past couple of weeks. Like gold is not really doing it. As far as being really aggressive, bullish when the dollar's had bearish days, and yeah, you might see gold get crushed here. If the dollar continues to push higher, gold will get crushed. Here's another thing: rates. The 10-year yield is pushing really aggressively, strong higher. It's back up at like kind of this top that it definitely hit early July. That kind of hit back in early March as well, and looks pretty good to continue in the bullish direction there as well. Now the 10 and 2 inversion, you can tell the 2-year yield is not doing nearly as much as the 10-year. So we can go take a look at that just real quick. Yeah, you can see it's just not doing a whole lot there. So you see that on the 10 and 2 inversion, you get a lot of strong move, a pretty strong move up here. And this thing might have bottomed. It might have bottomed back here in July, which, if this thing starts moving up aggressively, then, yeah, I would be very careful on the stock market. HYG, the bonds, oh my gosh, bonds. They were looking good yesterday. But bonds got hit all night. Like we were talking about, the 10-year yield was very strong. It is very strong today. Let me look at the 20-year. I mean, the 20-year is up a lot as well. I'm going to go to a weekly. Yeah, the 20-year is looking really good. Let me go to a 30-year. 30-year? 30 years up good? I mean, man, yeah. Yep, the farther out bonds are definitely breaking out. Let me look, maybe 5-year. How's the 5-year doing? 5-year's doing okay today. I would definitely be... Yeah, I'll be watching those longer term bonds. They start rising. Even if the short term bonds don't drop, and that's typically what you see when you go into recession, usually you see the short term bonds actually drop. We're not seeing them drop. We're actually seeing them just not rise as much as those longer term bonds. Those longer term bonds, I mean, we're seeing the 30-year bond. I mean, it's up strong today. It's up over 2% today. Look at that move. The 30-year bonds don't move like that all that often. Yeah, they're up pretty good today. Anyways, yeah, but bonds moving higher is putting a lot of pressure on or I'm sorry, rates moving higher is putting a lot of pressure on bonds. Bonds are dropping off pretty good. Bonds are dropping off really strong. Here's the LQD. You can see it's breaking down. Like they just got hammered overnight. And the TLT, whew, TLT, look at that. It was sitting right on that support level. Today it gapped right underneath it, right under the lows that the TLT put in back kind of like an earlier July 10th. So gapped right under that and just flushed out. And bonds just don't look they don't look great, man. And we have already seen like one of the wider discrepancies between bonds and equities that we've seen in multiple decades. So if bonds continue to drop off like this, equities are going to get annihilated. They're going to get annihilated. So, anyways, just continue to pay attention to rates and bonds, because if they keep moving down today like that, if they keep moving like that going forward like they are today, that's going to be brutal. And I get it. A lot of retail people, they love to focus on equities because really it's sexy. Equities are way more sexy than the bond market or currencies or foreign exchange or any of that kind of stuff. Commodities, equities are equities are where it's fun at. But man, it's brutal. Brutal some of those moves in that bond market. All right. So let me look at sector rotation before we get to running through some stocks. Because I'm gonna imagine tech is doing pretty good today. I don't. Since we popped so aggressively at the end yesterday, I don't really know how to look at this. Indicators. Sector compare. There we go. Right there. All right. So, okay, we got tech is up. Tech's actually doing pretty good. Tech is doing pretty good today. Hold on. Is that the right spot? Yeah, that's the right spot. So, man, it's just such a discrepancy today. Jeez. All right, anyways, should tech be doing that good? I guess so. AMD has earnings after hours today. They're up pretty good. That's why I just saw that they were up over about 3%. I was like, did they have earnings? No, they got earnings today. Got XLK, XLC doing the best today. Tech and communications. Tesla and Amazon are not doing great. But yeah, tech and communications, which it's kind of funny because it looks like Google and Meta kind of offsetting each other. And then that makes me like, where's AT&T, Verizon? I don't know why Meta and I don't know why XLC is actually doing that good today. Let me just take out the gap. Something's weird. All right, we got XLK, yeah, XLK, XLC up at the top there. Materials, industrials, still outperforming as well. Energies clawing back, man. Energies were underperforming pretty heavily early on. And then you got financials and real estate. I'm surprised they're actually not doing better with rates moving up as they are, or at least financials. Discretionaries, XLY. Yeah, we saw Tesla and Amazon are both getting hit today. Healthcare and stables are lagging behind, and so are utilities. All right. Um, so, what else is going on? SBAC. This probably be the quietest day of the week. Honestly, we got Pfizer, PFE. A little bit of a gap down. Traded way higher initially. It sold it all off. Came down. So that's Pfizer. Uber. Let's check out Uber. Uber got crushed. All right. Uber got crushed. They're down 6%. Currently, wow, they got crushed. That first 5 minutes, they got crushed. Jeez. That's Uber. Norwegian Cruise Line Holdings. Norwegian Cruise Line Holdings. There we go. Ooh, down 13.5%. Ouch. CCL. Carnival Cruise Lines. They're down, but they're not down as much. Okay. So maybe leisure travel isn't all that great. I was trying to think of another cruise line. I can't think of one right now. It's not a big deal. Caterpillar though, Cat had some really good earnings apparently. I mean, I don't know if I can tell you one thing. I would not chase that. I would not like if you've been in on the Cat run. I'd be closing out. I'd be closing out right now. Like that's awesome. That's a very strong move. They beat on top line by 5%. They beat on bottom line by 21%. Whoa, that's a monster run there. Wow, what a move. I'm gonna go check out Finance Yahoo here in a second. I want to see what the heck's going on there. Deer getting any follow through like that? Not really. I mean, they did initially, but they gave some of that back. Deer is almost up 1%. Let's go see what's going on here. Cat. Caterpillar earnings sending conflicting signals. Dow gains, Caterpillar sales, Uber earnings, yeah. Caterpillar is in the Dow, so that's one reason why the Dow's doing pretty good today. So, kind of curious. Earnings sending conflicting signal strategist. Oh, cool. Really short. All right, really short. Oh my gosh, Jesus. Caterpillar's second quarter results handily beat Wall Street estimates. However, the construction equipment manufacturer warned that its third quarter sales and revenue will not be as high as they were in the second quarter. Roundhill Investment Chief Strategist Officer David Mazza tells Yahoo Finance Live that the company's results are telling us conflicting signals. Mazza points to the regions where the company saw sales as one of the things he's watching. U.S., North America, relatively strong. China, and the outlook for China remains weak. So yeah, I think if you're in on Cat, you want to be. I don't say bear. I'm not gonna say bearish because that's a very strong move that they're having today. But with that little phrase, and then U.S. North America relatively strong. China and the outlook for China remains weak. And we know that over the past like 2 decades, China's been the growth story for much of the world economy. So if they're not looking good, and we've continued to hear that from a lot of different sources about the Chinese economy and stuff like that. So I would say might be time to just step away from Cat. Caterpillar revenue gets a boost thanks to higher sales and demand. I mean, but is all that revolving around like manufacturing for like the CHIPS Act stuff. Like that's kind of what I'm thinking. That's why they're probably seeing somewhat strong demand is still in the U.S. Anyways, that's just my take. All right. Oops. APL. How's APL doing? Apple's doing okay. Been all over the place today. All right. Microsoft. Microsoft's doing all right. It's up over 0.5%. Meta's positive. Alphabet. Nice gap down on Alphabet. That's a pretty nice gap down on Alphabet. Amazon. Amazon earnings in 2 days, down a little bit over 1.25%. Okay. How's Netflix? Netflix throwing a nice doji today. Currently up about 0.25%. NVIDIA. Nice little gap down 0.25%. Okay. AMD though, getting a push today, up a little over, up almost 3% actually. Preview AMD gains ahead of report. Whoa, hold on. AMD gains ahead of report after the bell. Okay. Never mind. Ahead of like their earnings report after the bell. Got it. I was the way I initially read that. I was like, there was some report that came out, basically kind of like leaking the earnings of what they were going to be. What's going on with AMD shares? Yeah, yep. All right, so if that's why they're up, cool. AMD, people just optimistic. That's all it is. Got it. And then what was AVGO? AVGO. Broadcom. Looking pretty good there on Broadcom. Nice push, up 2%. Okay. Intel. Yeah, Intel, man. Talking about that yesterday. Intel had a pretty bearish day yesterday. I said here over the next like day or two, as it kind of comes down to kind of get in contact with these moving averages, buy it. I'd say you're still buying this even tomorrow. It's gonna look pretty good. Texas Instruments is down pretty good. What's it about? Down about 0.8%. All right. Qualcomm 0.2% lower. What is this? ANET. Earnings. Excellent. There we go. Earnings. ANET beat earnings. Top line 6%. Bottom line 10%. Nice. Yeah, stock's up 20% today. Woof. That is a move. Yeah, that's a move, man. That's a move. Is that all-time highs? It looks like it. Yeah, it looks like all-time highs. Nice. Good move there on ANET. What else we got? Yeah, Alphabet's down. What is this? IT. Oh, how generic. Gartner. Oh, yeah, Gartner. I didn't realize their ticker symbol was IT. They're a little short on top line revenue, but it's basically flat. They beat on bottom line by 14% though. That's nice. Okay. What else? JetBlue. We can take a look at JetBlue. Oh, Yum China. It was yesterday after the bell. Let me take a look at JBlue. Yeah. J Blue. Yeah, I was kind of wondering because I was looking. I briefly was able to look at all the transports, all the airlines down over here, they're all red. So yeah, J Blue probably bring down the airlines. All right, that sucks. What was Oh, Yum China. Ooh, they got beat down. Missed on top line by 2.5%. Beat on bottom line by 3%. Okay. Yep, down a little bit under 6%. About 5.5% lower on the day. Health Services, IQV. IQV. Earnings here on IQV. Flat on top line, beat on bottom line by 2.5%. Nice. Estee Lauder? Is that Estee Lauder? Estee Lauder down almost 3%. Not on earnings either. Okay. That's interesting. Nike's also down. And Nike's down 0.75%. Under Armour? How's Under Armour doing? Under Armour's got earnings in a week. Have they been making money? Oh, yeah. They've been having positive earnings. All right. Okay. McDonald's. Yeah, you can see Cat, Deer, all doing well. What about GE? Oh, hold on. What was that? AMAT. AMAT actually overtook GE for the second largest industrial company. So AMAT having a pretty good day there. LRCX had earnings last week. A little bit of a gap down today. Trading higher though. GE. GE's had a couple days of pullbacks after earnings last week. Okay. Amazon. Did not look at Tesla. Tesla not looking good here. Definitely looks like it's going to break down to the 50, or maybe just sideways consolidate here and let the 50 come up to it in this sideways consolidation. Yeah. Excuse me. Yeah, I got nothing here. Probably until it breaks the 50, until it breaks this low right here, back from late June. No need to try to be bearish here on Tesla. I just wouldn't be bullish, but I wouldn't be bearish right now. Qs. So the Qs kind of just pulled back today into the 10 EMA. Bounced. Really also off the support line. Nice move there on the Qs. See the SPY kind of do that. SPY didn't get as close to that 10 EMA. SPY is also at really probably more of a resistance area because you got a resistance top here back from March of last year, and then also then January of last year, a year and a half ago. It's also where some lows kind of lows were kind of in December of 2021. So, I think it's going to come down to AMD earnings, in my opinion. Yeah, because there's nothing else there. I mean, there's nothing else out of all the companies that have earnings today, after the bell, and tomorrow that I would say really will dictate the market in any way. It's going to be AMD. It'll be AMD. And so if AMD doesn't shine brightly and dollar keeps going higher, and rates keep going higher. Longer, and I would say the medium and longer term rates keep going higher. Shorter term rates are actually doing okay. They're not really climbing as aggressively, but it's like the 10, the 15, the 20, and the 30 year government bonds. Man, they're just screaming higher today, and that is brutal. I'm actually kind of surprised the stock market's not selling off more. People trying to go lock up some longer term guaranteed interest rates income. HYG, you see the bonds is getting annihilated today. HYG, I would say it's off the lows, but not really. It's still kind of down there. All right. Let me know if there's anything you guys want to look at. Honestly, I think I figured out all the things I needed to do to look at today. I mean, that's kind of the nice thing. Whoa, APRN. What is that about? Up 15%. I mean, it's just a quiet day in the week. Not a whole lot of earnings or anything really going on today. Stem, Watt. Yeah, man, that's crazy. That's a nice move. Keep going. Short squeeze, everybody. Dominion. Yep, some of those utility names are down pretty good. Dominion's getting rocked. They're gonna have earnings later in the week. They gapped up yesterday, but they've gotten rocked ever since the start of the week. Jeez. Let's go run through these sectors. Actually, I'm gonna look at the sectors individually to see how they look like. Wow. So real estate definitely got hit last Thursday, pretty good. Sideways yesterday and today. See what happens. That doesn't look great. Looks like it's gonna break down. All right. Materials. Materials. A little bit of a gap down today. Not doing a whole lot. That hasn't broke below any moving averages. You do have a little bit of a resistance top here from back in February. Okay. Industrials. Yeah, I was really wanting to see industrials pull back more. It's alright. It is what it is. It might happen. Just not going to happen when I thought it was going to. Financials. I still think financials have a lot of issues. I still think they have a lot of issues. Yeah. Energies. Energy's got a nice little uptrend going. Take a look at crude oil here in a second. Utilities, man, just dropping. Past 4 days, just dropping. Healthcare, past 4 days, dropping. Staples, yeah. I mean, they had a strong gap up. I mean, they sold down pretty strong on Thursday. And then they had a very strong gap up there on Friday. But now we're getting back down to the lows that are put in on Thursday. Will we see a decline? Will we see a decline more than 1% in August? Man, like on a particular day? Who freaking knows, man? I don't know. I'm hopeful. I'm hoping. I don't mean, I don't, it doesn't matter anymore. Now I'm just waiting to buy the dip. But, yeah, I don't know. Because, I mean, bond yields keep going higher, and it's like the stock market doesn't even care. And that's supposed to be kind of a bearish thing for the stock market. So I don't know. Like the stock market just doesn't care about anything anymore. And so you don't know, you just don't know when things are going to when things are going to recorrect and come back in balance. The right now we're seeing huge discrepancies between bonds and equity markets, and this is probably like This is some of the largest discrepancies we've seen on these markets in a couple decades. So it's like there's no reason to be bullish right now. Just let it keep doing what it do. Nothing you can do about it. Can't be bearish because you don't know how long it's going to take for it to kind of top out, roll over. A lot of I saw. I think there's some bulls that are saying that they could see a pullback in August, and then I think Mr. Wharton, Mr. Jeremy Wharton. Oh, what's the guy? I think it is Jeremy Wharton. Oh my gosh, dude, load already. Oh, what's his name? Yeah, I think Jeremy. Oh, the professor from Wharton School of Business. He basically said, yeah, he could see the markets hitting an all time high this year. I was like, that would be so freaking stupid if that happens. Anyways, he said price targets going higher. PE doesn't matter. PE never matters. Like as far as like technicals, I mean, because the markets always get disjointed. I mean, it happens all the time, and it's like there's nothing you can do. Like I just don't want to put capital to play because once the party's over, I mean, it'll be over, and it's going to be over very quick, very harsh. Anyways, XLC not really doing a whole lot today. Kind of flat. Tech doing its best things. Tech's getting an uplift from AMD. AMD's helping out. Pre-earnings, little bump there on AMD. XLY, XLP sideways, not really doing a whole lot. SPY-G, SPY-V, growth versus value, not doing a whole lot either. Okay. One thing I was actually kind of interested to look at, Wilshire 5000. So I don't know if y'all have seen this, but the Wilshire 5000, kind of curious how far back this goes. Ooh, nice. Oh, it goes back a ways. All right. So the Wilshire 5000 and the U.S. GDP is GDP. U.S. GDP. There we go. So I was kind of curious on how this would look. I need to figure out how this works. So this is like basically Warren Buffett's like favorite gauge to to look at. Is now a good time to be investing in the market? And basically said whenever like U.S. equities I think it's currently like 171% of the U.S. GDP, and whenever it gets close to 200% of U.S. GDP, that's when you don't want to be in the market because it's way overvalued. He said anytime it's under 100 though, you're wanting to be exposed to the stock market. He said that's like a general kind of just rule of thumb. Anyways, I thought that was kind of neat, so I wanted to kind of mess around with this. I wonder if is there real GDP trend. Maybe it's this one, quarter over quarter. No, it can't be right. No, that can't be right. Let me. This is one thing that'll help. Let me turn that off. Where is? All right, hold up. I just need to look at GDP. U.S. GDP, because I don't know. Um, 1 quarter? No. 1 month? Okay, so that's hard to tell because U.S. GDP is measured. I guess that's the way it's calculated. In calculating quarter. Well, then how's this quarter over quarter? Ugh, that looks like quarter over quarter change. Yeah, it looks like quarter over quarter change. Which, uh, it, hold on. This is still like an annual rate or rate of change. Okay. U.S. GDP. What else you got? Deflator from transportation. Blah 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 blah. Year over year. I don't want year over year. I'm gonna try real GDP. I don't want it in yearly. I want it in monthly. GDP. All right. This is really, really annoying. Quarter. Quarterly financial results. Blah blah blah. Yeah, that's not what I'm looking for. So I don't know if TradingView just doesn't have it. They might not. It's kind of a bummer. What is it? It's just GDP, right? Yeah. All right. You need to see it's real GDP. I mean, I guess is the only one you got to go with. So they have yearly data for the U.S. GDP. The last one we got was January of 2022. I guess we had. Well, that's when it's marked. It's marked January. So I don't know when that actually number came out. So that number was probably came out what probably was first kind of finalized. I guess in May because it probably was first released in March. It was updated in April, revision in April, revision. There should be. Is it 2 revisions and then a final, or is it 1 revision and then a final? Yeah. Anyways, it was probably finished out in May. So we probably got that number for 2022 in May, so a few months ago. So obviously we're not going to get, you this year's GDP until May of next year. Anyways, let me see if I can get the Wilshire back on here. Wilshire, fine. Just take that off. There we go. That's why I couldn't get it. Wilshire REIT ETF. That's not what I want. Wilshire 5000 price index. There we go. 12 months. Perfect. Wilshire divided by U.S. GDP. Going all the way back to the early 70s. Um, I'd rather see the quarterly data of this. It's kind of hard to tell here in TradingView. I know. I'm really kind of bummed that TradingView actually doesn't have the GDP data quarterly. They only have it in here annually because they give it out quarterly. It's really kind of a bummer. It's okay. That's all right. Someone I just wanted to play with. Anyways, how is the market doing today? Man, it's just getting kind of flat though. Past couple of weeks, it's getting kind of flat here. We'll see. Let me know if there's anything you want to look at. I was trying to get that the Wilshire GDP thing, but I don't. They probably have access to better data than what TradingView has. Let's see. Yeah, I'd be curious to see what AMD earnings come in at after the bell. That's gonna be the most important thing of the day, or at least overnight. And what was TSM? How was TSM doing? Yeah, TSM 2 weeks ago, man, those earnings that they had, that was really kind of interesting. What they were talking about, that they were seeing a lack of demand in the second half of the year. So, and we're still seeing computer components like processors and graphics cards continue to fall price wise. So, yeah, if that continues to happen, yeah, I mean, TSM and gonna continue to come down. I would imagine. I mean, it might be a grain of salt because there just might be only demand. I'm not gonna say only demand, but just there's just so much damn demand for AI chipsets. I don't know. They don't get into all the little nuance about that. So because Microsoft is like, we can't get our hands on enough AI chips processors. So I don't know. I don't know what's going on. It's kind of hard to tell. But Outfunners, that's really all I got. Let me know if there's anything you really quickly want to look at. But the main thing is to be looking at after the bell today. We got AMD earnings, and then yeah, keep your eye on the dollar and rates. Rates continue to push higher. It will suck the life out of the market eventually. It will eventually happen. Look at Microsoft. I'm looking at Microsoft. What you want to look at? It did beat on earnings last week. They just had some commentary about. They just had some commentary like not be able to get enough AI chips. Why the gap down? Don't close at 330. Gap down 330. Oh, this? Are you talking about this lower? Not say it won't. Yeah, I'm not gonna say it won't close. I mean, you the upper bounds, like this upper line here and this lower line here. This is definitely like previous tops, or kind of like distribution pattern that it had back at the all time high, the previous all time high, back in 2021. So, yeah, I mean, it's just gonna be it's in a choppy zone right now. It's still a little bit of an uptrend. I mean, it's the 50 EMA is kind of being supported right here. It doesn't mean it's going to hold. I mean, but if it gets through that, it's going to fill that 330. There's just not much that's going to get me to say, like, hey, be bearish on Microsoft. Yeah, you're not going to get me to say that. Alpha Hunters, you got to do it for me. Y'all have a great rest of your day. Take care. Watch the AMD, dollar, and rates. Alrighty. Take care, Alpha Hunters.